Welcome to Daybreak Asia. We're counting down to Asia's major market opens.
Australia has just come online. The top stories this hour. Asian stocks set for a positive open after a big tech rally sent Wall Street higher as investors await key inflation data and bank earnings. Boeing tumbling the most in 15 months after the partial MAX 9 grounding. United Airlines confirming inspections have found more loose door bolts. Plus, Samsung set to release preliminary fourth quarter earnings with analysts expecting signs of a recovery in chip and electronics demand.
Oh, Bill, we are getting, of course, the start of what is going to be a pretty data-heavy week, right? We're looking ahead to inflation in particular out of the US, but also here in Asia. But let's kick it off. We do have the South Korea current account balance numbers just crossing the Bloomberg for November. And this is a picture that we see that current account number narrowing to just over $4 billion for that surplus, a goods trade surplus widening to just over $7 billion as well. That November current account data showing us that the October current account surplus coming in at $6.8 billion. Last year, the November deficit was $222.8 million. That goods trade surplus at just over $7 billion versus $5.3 billion surplus for the month of October. When it comes to services, we're seeing that $2.13 billion in November for the surplus, again widening from $1.25 billion, the deficit that is in October. And of course, this feeds into what is going to be a pretty data-heavy day, particularly as we get into that Tokyo CPI reading, which we're expecting later on this morning as well, and how that potentially starts to feed into some of those 2024 central bank expectations, right? We do have that Bank of Korea decision as well this week to kick off the action here in Asia. But let's get you straight to the market open here in Sydney. That staggered open suggesting that we're going to see that climb to a bit of an early rally, just about 0.25% higher. But in futures, we're indicating upside of over 1% at the start of the cash trading session. We're also watching the Aussie dollar running into really a bit of resistance, given we've seen the big rally of almost 10% since late October last year. But still, any kind of correction is seeing a bit of a respite, if you will, for the Aussie, given that we saw the dollar rally easing, falling along with that slide in oil, that Saudi price cut weighing on treasury yields and lifting the US shares as well. We saw that yen outperformance as a part of that FX action that we saw. Of course, China will be a pretty major factor as we look at what some of the potential outperformers in Australia will be. Look to some of those China-sensitive proxies, the likes of iron ore and some of the other miners, as well as some of the services-related names as well, given that we do have that reporting that potentially the PBOC, Chinese policymakers, are hinting that a further a triple R cut could be on the books. They did this last year. The signal came in July, and that came through later on in the year as well. So pretty strong signalling there of more policy support to try and stoke lending in China. Switching out the board and taking a look at some increased gains there in the New Zealand session. Kiwi stocks up by about 0.5% there. We're also seeing Chicago Nikkei futures looking pretty flat, but we are potentially seeing a bit more upside when it comes to the open in Hong Kong, Bill.
Yeah, well, Heidi, we just got US futures coming online now and fairly steady at the start here, but a pretty robust session at the end because it was really led by those gains you can see in NVIDIA. That is the last close you're seeing there for the stock, but the gains representing a fresh record high for the company, releasing new AI chips. This is going to be helping to power along PCs, perhaps luring new customers, so a lot of optimism there. The other big mover in the session to note was Boeing, of course, and we saw that stock, as I said, tumbling the most in 15 months. So one to keep an eye on, as well as it really grapples with the fallout from the Alaska Air incident on Friday. So that's the state of play for US stocks. As I said, fairly steady here. But again, when you look cross assets as well, it was a fairly range-bound, muted session. The big move, of course, came through in energy. Let's take a look at how WTI has come online, because we did see that drop yesterday. Today, so far, we're seeing it holding fairly steady, but it was that story of perhaps the weakening demand outlook coming through against the picture of stronger supply. That fed into the moves that we had in Treasury yields. We saw a slight move higher for yields in the session, and also a bit of dollar weakness that came through Bitcoin. One to watch, Heidi, of course, with the optimism for a spot Bitcoin filing to be approved.
There's some optimism, Belle, when it comes to the outlook for China too, right? Chinese monetary policy authorities indicating another reserve ratio cut may be on the way to boost lending and fire up what has been really, let's face it, a feeble recovery. Let's bring our global economics correspondent, Enda Curran, with us. And, history would show us that this kind of signalling we should take seriously, because at least last year was followed by the last RRR cut that we saw in September. But I do wonder, does it fix the problem of what has ultimately been lacklustre demand and dwindling confidence?
Yeah, quite right, Heidi. It's obviously a strong signal. It's a PBOC official being quoted by Xinhua, making the point that the central bank will support the economy through measures that include either intervening in the money markets, or they could, of course, bring down that reserve ratio requirement. The idea being there that it frees up liquidity for banks to lend into the economy. But to your point, though, this has been a bit of a long-running debate over the last few years with China's economy. It doesn't necessarily need cuts to shorter-term interest rates. The problem isn't the lack of credit. The problem, of course, is the lack of animal spirits to go off and borrow. Banks certainly have been on the receiving end of very cheap loans from the policymakers in recent months, and we haven't yet seen kind of major traction in terms of a turnaround for China's economy. So it's expected. It will, of course, be a welcome measure, but as you say, broader steps I think will still be needed to get the economy up and running. It does, though, it could mean, if it happens, that if the PBOC does ease the RRR ratio, it will bring them in line with the rest of major central banks around the world when it looks like we're heading for a year of policy easing. That was very different to last year when the PBOC was out there on a different path to the rest of its peers.
Yeah, when you talk about that path toward easing, because we've heard as well from key Fed speakers, Raphael Bostic, for instance, Michelle Bowman, saying perhaps the prospects for a cut are nearer.
Yep, we're at a very important point now in this Fed debate. We had Raphael Bostic out there today making the point that inflation is cooling faster than he expected. It's heading back towards the 2% target. This is in line with some kind of emerging thinking from economists here now, that they are kind of collectively saying we missed inflation on the way up. There's every chance we could miss it on the way down as well. So there's a feeling that central banks need to get ahead of the curve in terms of cutting interest rates. But Raphael Bostic did make the point that he's happy where policy is at the moment. He thinks it should be restrictive. He certainly wasn't signalling the need for a near-term rate cut. Broadly speaking, data on the US economy is pretty strong. We had strong credit lending data today for consumers. We had strong jobs data last Friday. The Fed have penciled in around 3 cuts in their forecast for the year ahead, but they're also trying to manage expectations. They haven't signalled that they're going to be reversing course or bringing down interest rates in the near term. And I think that was a message from Raphael Bostic. Inflation is going down. It's going down pretty fast, but it's not there yet. And that's why I think the Fed is trying to keep a hold of the narrative. They're willing to cut, but they're just not there yet.
All right, Enda, that was our global economics correspondent, Enda Curran, there from Washington. Something we're going to be tracking very closely this hour. We've got Samsung due to report preliminary earnings for the fourth quarter, likely perhaps to have managed to stem revenue and operating profit slides in the 3 months ending December. Joining us from Seoul for a preview is Bloomberg's Yulim Lee. So, Yulim, just talk us through more of what's expected later this hour.
Sure. Samsung is set to announce its preliminary earnings for the fourth quarter very soon. Based on analyst estimates, Samsung probably posted revenue of 70.3 trillion won, which is a little change from a year ago. Operating income is likely to be at around 3.7 trillion won. While this is a decline of 14% year on year, it's a huge improvement from the 78% decline in the previous quarter. So overall, the numbers may suggest that the biggest memory chip maker, is recovering from a very severe slump that weighed on the entire industry for more than a year. Samsung and its peers cut production last year to try and stem the steep price declines.
What are we seeing when it comes to the semiconductor division?
Yeah, semiconductor division, obviously the biggest revenue generator for many years until very recently when the industry went into a huge slump. We are gonna get a clear picture towards the end of this month when the company releases its full earnings and division performance. But as of now, it looks like the company's memory chip division may have reduced its operating losses in the fourth quarter. Analysts are expecting a consensus of 1.5 trillion won operating losses for the quarter, which is really a big improvement, compared to the previous quarters. So while we don't have the whole picture, it looks like the company is on the trajectory path for recovery, and I think we will see whether the company's outlook that they announced in the third quarter, that the memory market is due to bounce back in 2024, whether that's going to happen later this month.
Bloomberg's William Lee there in Seoul. And we'll bring you those earnings to you when we get them. We'll also be speaking for some analysis with Counterpoint, why they think Samsung is on the rebound from its lowest point last May, and getting more on that outlook as well. But first, IG tells us why China's deflation is poised to create a broader economic issue this year. That's next. This is Bloomberg. This is a picture as we see building gains when it comes to this early part of the Sydney session. We're about 15 minutes or so into the start of the cash session. That staggered trading underway. We are seeing, given that big bounce that we saw in US tech stocks overnight, that really led the bulk of that rally and the outperformance in the Nasdaq 100. Unsurprising, we're seeing technology shares the outperformer in this part of the Sydney session as well, up by 2% there. But we are really seeing every sector there in the green, including real estate and industrial. Some of the mining names are doing quite well given these expectations of more policy support out of China. The notable underperformer, though, muted gains there for energy as we continue to see more volatility for oil. Our next guest really sees the stock market undergoing a reset to the start of this year to address unrealistic expectations. Let's bring in Hebe Chen, who's a market analyst at IG. Hebe, so that suggests that you think market pricing when it comes to Fed expectations is perhaps overdone.
Yes, I think that the market, even a bit pullback today, the market's still pricing in about 60% chance for a March rate cut, and up to 6 times. So I think that expectation was way too high. I think that's one of the key reasons why we're seeing the 9 weeks of rally towards the end of 2023. So I think a bit of the healthy pullbacks, you put it in this way, the reset is quite healthy for the markets to self-adjustment for what could be the realistic expectation that we can carry on into the rest of the months to come. So at this stage, I still think it's quite healthy, and it's quite helpful and beneficial for the market to reassess and where the right path to move forward.
When it comes to China, some of that optimism, of course, has really lifted parts of the Australian market. In particular, we've seen the gains in commodities-related names, iron ore as well as the Aussie dollar. Do you think the latest expectations of a triple R cut from the PBOC is a meaningful development when it comes to hopes that the Chinese economic recovery can get back on track?
Well, I think for my personal view, I still feel a little bit not certain about what sort of recovery path that China is going to heading into. One of the key reasons is, as we know, that China is now stepped into the deflationary condition, and we're going to have the CPI from China to showing that China's deflation stays for another month. Would likely to be the slowest. So the most substantial pace of price dropping since 2020. And the ramification for that, which I always think will be the biggest risk for China in 2024, is that will sort of engine a bit wider impact. For instance, if the price keep falling, they will definitely impact the profitability for the business, and they will start to cutting the costs, cutting the production, even cutting the labor, and push up the unemployment rate. So all this ramification, which I think will likely to create or generate the biggest risk for Chinese economy in 2024. So at this stage, I still stay quite a bit cautious about the economy outlook for China.
Does that mean, and I suppose there are multiple reasons why you potentially think that the rally for the Aussie might need to take pause?
Yes, I'm quite cautious for that. I think you mentioned earlier, the Aussie dollar has been up about 10% for the past 2 months. Of course, one of the drivers is because the market believes that the Reserve Bank of Australia will be the slow mover. They will be the last one to start cutting, even at this stage in the year, to saying that we have done. So that's one of the key drivers. But on the other hand, I think at this stage, we are seeing pretty likely this week, we're seeing the ball will be slow back into the US side, slow to the China side. In a case that we are seeing the US CPI, for instance, pushing a bit higher, there's the hope for the Fed to cut in March, or less chance for the Fed to cut. And China's economy still kind of question what sort of a demand for the Aussie dollar and commodity. I think that will tend to be a pivot point for the Aussie dollar that sort of challenge the strength for the Aussie dollar in the past 2 months.
Where do you see opportunities then across the region?
Well, I think that overall, I still think they see that they're quite a strong economy momentum in the APAC region. Yes, we do see China's economy is a big issue there, but if you're looking back in 2023, we're seeing the India and the Japan, the Taiwan, they're all showing quite a strong momentum in the economy. And I think that will be likely to sort of generate a longer-term opportunities if the investors would rather to looking out of the U.S. market and to showing the appetite for more of the developing regions as well as the developing asset class.
Hippie Chan, always great to have you with us, market analyst at IG, joining us from Melbourne, and you can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can find that at DayBgo. It's also on the mobile in the Bloomberg Anywhere app. You can customise those settings as well, so you just get the news on the industries and assets that matter to you. This is Bloomberg.
It's clearly not in the interest of anyone, Israel, Lebanon, Hezbollah, for that matter, to see this escalate and to see an actual conflict. And the Israelis have been very clear with us that they want to find a diplomatic way forward.
That was the US Secretary of State Antony Blinken speaking in Saudi Arabia. And Blinken, of course, on his 4th trip through the Middle East since Hamas militants attacked Israel on October 7th. Let's get more now with Bloomberg's Vonnie Quinn joining us from New York. And Vonnie, what's the latest on Blinken's trip and what's been the key takeaways so far?
Well, you heard him just saying there that the Israelis have been clear with him that they would like to find a diplomatic solution. But Israeli officials are saying the time is running out for Israel and Hezbollah to find a diplomatic solution. This, of course, coming on the heels of the latest attack, which was by Israel on a Hezbollah target, a commander in the Hezbollah militant group who died and was struck by an airstrike in an SUV, according to the Associated Press. Now, it's the most senior Hezbollah militant killed since those October 7th attacks by Hamas. And it hasn't gone down well in Lebanon, as you can imagine. It's not clear that Lebanon is going to respond, but this has been the pattern so far. One side strikes, the other side strikes something else, and it continues on like that. Now, the Israeli Prime Minister Benjamin Netanyahu was in the north of Israel today, and he was saying we prefer that this be done without a wide-ranging campaign. He's referring to returning the displaced families to the north of Israel in a secure environment. He said, though, that Israel will not stop without this being safe for those families, and that will not stop us if it's not, in other words, if it's not, in a diplomatic way, that it will get done one way or another. Now, that's fighting talk from the Prime Minister of Israel. Meanwhile, you have Secretary of State Antony Blinken on this tour of the Middle Eastern countries, along with Turkey and other nations as well, trying to get support for a calming of the situation. situation so that it doesn't escalate, because it could be a conflagration any day. And each day that Antony Blinken has spoken, he has mentioned this and he has warned, but it's all rhetoric, it's all warnings at this point. Deterrence is one thing verbally, but what do you do about it, actually? And it's very difficult to know. If you just switch to the United States for a moment, there were also protests, both in New York City, where more than 300 people were arrested for blocking tunnels today, but also where President Biden was on a campaign trip to South Carolina. He was at the Mother Emanuel AME Church when some protesters started shouting ceasefire, referring to Gaza, in fact, ceasefire now. Biden did speak to them. He said he understood the protesters' passion and that he is quietly working with the Israeli government to get them to reduce significantly and get out of Gaza. Now, we do know that it looks like Israel is terminating in the north, terminating its operations to some extent in the north, and is concentrating on this middle and southern part of the country at the moment, but that it will take more months for those operations to be done.
Yeah, and there's also the question, of course, what happens in the Red Sea, because this has been such a key area for escalation and a lot of concern from the US and its allies as well.
Exactly, and Antony Blinken addressing this in the last few days as well. It's another area where skirmishes keep on breaking out, like in Syria, like in the border between Israel and Lebanon. The Red Sea, though, is actually having a very immediate impact on trade, and coming up to the Lunar New Year, just 5 weeks away, COSCO, one of China's biggest shippers, saying that it's now going to stop dropping off any kind of goods to Israel. It's the latest shipping company to suggest that its operations have been disrupted. Now, this morning we saw some interesting market action. We saw shipping companies drop on the news from a Danish shipping newspaper that some of the individual shipping companies had made their own agreements with Houthi rebels in order for them to secure safe passage in this part of the world, in the Red Sea. Now, Hapag-Lloyd and Maersk both came out and said, no, that didn't actually happen, not with their shipping companies at least, that they wouldn't talk with rebels like that. But it does suggest that there could be some other kinds of action on the way. After all, Antony Blinken can speak, and he does. He said today that 40 companies were now on board with the warning, that they were warning Houthi rebels something would happen if they didn't stop. But it's one thing for 40 countries to warn that something will happen. What exactly will happen with agreement between 40 countries is a whole other thing. It's not clear what that would be. Qatar, for example, saying straight out, no, you can't have strikes happen, because that would put us into a loop, an endless loop that would cause tension in this area, and we will not back that.
All right, Bloomberg's Vonnie Quinn there in New York, and just bringing your attention to some breaking news from the Wall Street Journal reporting. But HP is in advanced talks to buy Juniper Networks for a deal worth around $13 billion. This is reporting from the Wall Street Journal, but it also says, the publication, that it would put HP in a better position to in the era of artificial intelligence. So the deal from that reporting is saying that the two companies could announce it as soon as this week. It's just another signal that we're actually starting to see global M&A activity picking up. It really did get going toward the end of the last year, and the tech sector has been a particularly vibrant part of that. We'll have plenty more ahead. This is Bloomberg.
Just breaking news crossing the Bloomberg when it comes to Tokyo CPI. We are seeing that year-on-year number, headline number for December, coming in at 2.4%. That's actually a little bit softer than expectations of 2.5%, and a pullback from the 2.6% that we saw in November. Stripping out fresh food, we are seeing a reading of 2.1%. That is on par with expectations, and also lower than the 2.3% in the previous reading. If you take out volatile energy as well as food prices, we're seeing a gain of 3.5%, bang on expectations for December, and a little bit softer than the 3.6% that we saw in the previous reading. That CPI, when it comes to Bloomberg economics expectations, does give pretty much, give or take a little bit around the edges, a pretty clear signal that we are seeing inflation in Japan slowing somewhat. that push from import price increases is probably easing due to the recent gains we've seen in the yen. Of course, that week we had for the yen was the worst since 2022, but that is starting to climb again thanks to that weakness in the dollar. We're also seeing Japanese retailers pretty hesitant to raise prices even more because we are seeing some more selectiveness from consumers as well. So all of this will be very interesting because it does, of course, Bell, ultimately with lower inflation, adding to just more reasons for the Bank of Japan potentially to stay on hold in January.
Yeah, that's right. A lot of economists not really expecting any sort of policy change until April at the soonest. But let's shift now to tensions with China because, of course, we're counting down to some key elections. And one of those is the Taiwan one taking place on Saturday. And those tensions certainly at the top of voters' minds as they prepare to elect a new president. The three top contenders are making their final push to whip up support. And Bloomberg's Stephen Engel has reported from a rally for the ruling party candidate, Vice President Lai Ching-te.
Taiwan's presidential election campaign is into the home stretch ahead of Saturday's critical vote, with rallies across the island this week. Strained relations with China and talk of possible war make this one of the most consequential votes Taiwan has ever seen. We traveled an hour southeast of Taipei to Yilan, where the ruling DPP met its faithful in a raucous evening rally. Now, unlike the opposition KMT and TPP parties that favor closer links with mainland China, the incumbent DPP prefers maintaining a status quo of de facto self-determination and building a fairly sovereign Taiwan identity internationally. Taiwan President Tsai Ing-wen here in Yilan stumping for the candidate she hopes will replace her after 8 years in the Taiwan presidential office. That is her Vice President, Lai Ching-te. Two leaders Beijing has branded as separatists. China has repeatedly warned that any pursuit of independence could lead to military action against Taiwan.
Warships and fighter jets keep coming from China as intimidation. When we have such an aggressive neighbor, we must protect our territory.
China has definitely interfered in the run-up to the vote. Missiles and fighter jets are some examples, but it only pushes people to vote for the DPP. Sometimes the interference is simple and obvious, like through TikTok and other social media platforms. I want more legislation on national security. It will be safer, especially cybersecurity-wise.
Taiwanese are distinguishing between autocracy and democracy in this election. People are worried about casting the wrong vote and losing freedom and democracy for generations to come. This is why people feel this election is so significant.
I support independence. There are challenges facing Taiwan to gain international recognition. But Taiwan does deserve a place in the international community, not blocked by China.
Yes, but does a Lai victory mean we're closer to war?
I don't believe so. If China wants to attack, China would have attacked long ago. Taiwan is actually very easy to defend. Taiwanese people want to continue to rule itself.
Stephen Engel, Bloomberg News, Yilan, Taiwan.
And Steve will be reporting from the rallies for the two main opposition parties as well, the KMT and TPP, later this week. Our special coverage out of Taiwan continues in the lead up to next weekend's vote. Let's get back to one of our top stories, and Boeing slumping the most in over a year when U.S. authorities temporarily grounded the 737 MAX 9 planes following that mid-air blowout on Alaska Airlines last week. Katrina Nicholas leads Bloomberg's transport coverage in Asia and joins us now. And so the inspections of some of these grounded planes are turning up potentially more problems that could allude to the installation of these doors.
That's right. So what United Airlines has come out and said is they've found some loose bolts in some of the planes that they've already conducted preliminary inspections on. Now, in terms of the full inspections that need to be done, that is going to take quite some time, because what the FAA has come out and said is that you know, for carriers to return these jets back into service, they have to do full inspections, obviously, of the bolts, the fasteners on both the right right and the left-hand sides of these mid-cabin aft doors. And that is going to take some time. United has said that it's probably going to take 5 technicians working for several hours on each jet. Boeing has said, well, fortunately, the types of bolts that have been in question with the Alaska Airlines incident are only found on that MAX 9 jet, not on the other family of MAX jets. But even so, with those sort of delays in returning the fleets to full service, I think you can expect to see quite significant flight, rescheduling requirements in the US for potentially days to come, or weeks even.
And it's also interesting seeing how other, parts of industry are responding, right? We heard from Emirates.
That's right. So Emirates, Tim Clark came out the other day and said, this is really more of the same for Boeing. They've had several quality control issues, and this is just another one. Listeners probably remember the Boeing 737 MAX crashes that happened about 5 years ago, tragic incidences, lots of deaths in Indonesia and Ethiopia. And Boeing was really starting to recover from that. That MAX 737, real workhorse of the skies, was grounded for many years. It's now back in all of the markets around the world, and now they have this. Boeing's also suffered quality control issues in the past, particularly around its 787 Dreamliner. That's an aircraft, it's a longer range one, but when it came out, it was particularly using a lot of lightweight composite materials, and this was outsourced to suppliers, so potentially, problems around that. And the point that Tim Clark was making, though, is that if you're an airline, you're really beholden to the duopoly here, Airbus and Boeing. Where else do you go when you want to buy a jet?
All right, that was Katrina Nicholas, who leads Bloomberg's transport coverage in Asia. Breaking news now, because we've got Samsung reporting its preliminary earnings for the fourth quarter, and an undershoot here of what economists, or analysts rather, had been expecting here. So the operating profit has come in at 2.8 trillion won. That is well underneath the expectations that we had seen for 3.7 trillion yuan. So big gap there, 2.8 trillion won versus 3.7. Sales as well undershooting 67 trillion won. The estimate had been for around 70. Operating profit as well, as I said, 2.8 versus 3.7. So not great numbers for Samsung. We had actually been expecting them to stem that sales slide. We were expecting more signals of a pickup in the chip recovery, so not great numbers. Let's get more on them now with Tom Kang. He is the research director at Counterpoint. And Tom, what's your sort of sense check on those numbers so far?
Well, the numbers are a bit disappointing, but they are rebounding. So I think this shows that the rebound is going to be a bit slower than we all thought. So the semiconductor market has been starting to recover since the third quarter last year. Prices were rising, but it looks like the prices are not rising that fast, and the demand from certain sectors are not that strong. Of course, smartphones have begun to recover since October last year, so that's a good sign. But I think the disappointment on profit is probably because of the marketing budget that was spent during the holiday season last year.
Talk us through more of that marketing budget. How significant was the spending then, if it's really impacted the bottom line so much?
Samsung has been struggling because of its premium products, because the market now is very Apple-centric, and Apple is enjoying very strong performance. So Samsung has been trying to sell its foldables and this S series, but each year the sales have been declining a bit. So I think last year with the new foldables and with the new iPhone, Samsung was trying to overcome Apple's new products with its foldables, and it, as a consequence, had to spend a lot of marketing budget. And it's not easy to beat Apple in its major markets like Europe and the U.S., especially in holiday seasons. So I think the excess budget must have been spent for those products during the November-December timeframe.
Tom, we saw the rollout of 3 new chips from NVIDIA overnight, looking to sort of fill the demand from what they call AI PCs. How strong do you expect the rebound to continue to be on the back of demand related to AI, given the exuberance that we saw last year?
Right. So AI is now a big theme, and it looks like it's proliferating from the cloud to various edge devices, including smartphones and tablets. So this will probably be a bright side for the market this year as we see AI smartphones coming out. And NVIDIA's lead is kind of only enjoyed by NVIDIA till now, but we see more chip manufacturers also producing AI products that will be built into high-performance computers and smartphones, tablets, PCs, and other devices. So the AI trend is going to help the market. But like I said, it looks like the rebound is a bit slower than everyone is expecting. So we believe turnarounds for Samsung Electronics on the semi side to happen during the February-March timeframe, where probably they will break even, and we'll see profits coming in from the semi side as well as the DX and MX side of Samsung Electronics.
How do you see it potentially holding up against competitors? Because we have seen, I guess the strong side would be on increased shipments, right? Does that hold up if we're expecting to see more of that specialization product trend in the sector?
Right. I think these new trends that are coming out in the market are kind of a beginning, and we're going to see this continue. So AI and then electrification, computerization of the industry will continue. But like I said, it's the speed and then which sectors it affects the most. So consumer products like smartphones have been slow to enjoy this, and Samsung Electronics, as a result, has not been able to enjoy that market trend that much. There was more of a NVIDIA play and a server play, but now this year we'll probably see it coming to more consumer products, and that will kind of continue throughout the year, we believe.
What about the geopolitical angle as well? Because we've got the CHIPS Act that's now in full effect. We've also seen, for instance, Apple really losing ground in China to Huawei because of sort of a patriotic fever toward Huawei and China-made smartphone devices. How is that likely to weigh on Samsung over this coming year?
Right. So that's one of the two big trends we see in the market. AI on one side, but geopolitics on the other side. And it's going to become more severe, like we are seeing in the Taiwan elections. It's becoming a more of a power struggle between pro-China versus pro-US. So this is also affecting the tech industry, and Samsung is right in the middle of it. But you can say that Samsung, on some sides, it's benefiting because some of its competitors were on the rise, and they were coming from China. So YMTC, SMIC, these companies were actually competitors of Samsung, but the U.S. policies have hampered their growth a bit. But on the other side, China is now protecting its own market, so it makes it difficult for Samsung to enter the Chinese market, and it's even difficult for Apple as well. So the splitting up of the world, the two kind of pro-Chinese countries versus the pro-U.S. countries are going to continue to struggle, and tech industries will have to choose sides at one point or the other. So Samsung is kind of stuck in there, and we see it's going to kind of struggle coming back to the Chinese market and also serving Chinese clients. So that's one of the struggles that Samsung will face during 2024.
Tom, thanks so much for your time. That was Tom Kung, Research Director at Counterpoint, joining us with those Samsung earnings. And just to recap, that fourth quarter posting an operating profit miss, coming in at 2.8 trillion won over the period, down 35% on the years. So certainly a stock to be watching at the open. But you can watch us live, see our past interviews as well on our interactive TV function, TV Go. There you can also dive into any of the securities or Bloomberg functions we talk about. Plus, become part of the conversation by sending us instant messages during our shows. This is for Bloomberg TV subscribers only, or Bloomberg subscribers only. Check it out at TV Go. This is Bloomberg.
Bloomberg NEF expects an uptick in the solar industries.
Build volumes this year. That compares with 2023. That's following November's COP28 summit, which saw 200 companies, or countries rather, pledging to move away from fossil fuels. BNEF solar analyst Yoru Tan is with us. And Yoru, just talk us through some of the key trends, developments that we can expect over the solar market this year.
So three things we'll see in this year in the solar markets: the record high of solar installations, record low of module prices, and many companies will phasing out their old production lines. So in the just past 2023, the market grew by 64%, and we'll see 2024, it's another big year. So it will slowing down from the previous exceptional growth in the past 2 years. But this year, the total solar installation will exceed 500 gigawatts for the first time. And that's we are talking about 20 to 25% growth. And from the demand, from the supply side, the solar module price will hit the record lows again due to the oversupply issues. And we are also excited to see the solar industry are adopting the new solar cell technologies. Companies are deploying much more new capacities, and therefore they are phasing out their old productions, like including those owned by the leading manufacturers.
So we sort of projected over 20% growth in demand. Why are we then seeing solar stocks underperforming? What's the chief concern here?
Yeah, I think the most direct reasons is the oversupply issue across the solar supply chains. Actually, the solar manufacturers are deploying much more capacity in a pace much faster than the growing demands. And we see the solar module price have halved in 2023, and we expect the solar module price will continue to going down in 2024 due to the oversupply issues. So actually, it's like oversupply is not a new thing in solar industry historically, but this year we are seeing a more challenging situations that even those leading integrated solar manufacturers are finding themselves difficulties to maintain the profitabilities.
There's also the record low module prices as well that's really playing into the dynamics of the industry overall.
Yeah, I think it's like for the solar manufacturers, the record low of module prices means they are having a higher requirement about their production costs. Now, it's like the production cost is really critical because like even a tenth of a cent of cost advantage can determine whether the solar manufacturer can survive from the price war in this year. And the leading manufacturer will continue to leverage the cost advantage and squeezing out their competitors and using their very strong cash positions to playing a game with a game of chickens. And for the overall solar markets, I think the record of module prices, it's a kind of a good thing for developers and also for energy transitions in overall, because lower module prices can boost the